Elon Musk finally reveals what's been going on with Tesla's car sales since the company announced significant price reductions in China in December and then in North America in January of up to 20% on some models. There's been a lot of speculation on how that's going to impact sales, on whether or not Tesla did that because sales demand was falling and they wanted to increase customer orders, or whether they did that in an attempt to quell competition and beat them in their tracks, really ramp up output. So Elon Musk finally addressing those concerns, letting investors know what's been going on. So let's get right into it. Here I have pulled up the conference call after Tesla reported its quarterly earnings. Elon Musk and Tesla management held a conference call with Wall Street investors and answered and addressed these concerns. So let's get right into this. First, let's look at Elon Musk's recap of 2022, noting that in 2022, we delivered 1.3 million cars and achieved a 17% operating margin, the highest among any car maker, any volume car maker, I think maybe among any of the car makers. While doing so, we generated 12.5 billion in net income and 7.5 billion in free cash flow. This has been one of the more impressive things with Tesla stock, is that the company has just been ramping up profit margins, profitability, and cash flow as it has ramped up production. This is something that I haven't seen from any of the other EV car makers, is that efficiency and scale where they're all able to deliver that top line revenue growth. Many of the EV makers are experiencing exponential revenue and sales growth, right? But the thing that's missing from their financial reports and what you find in Tesla's financial reports is that Tesla is actually using the growth in revenue to increase profitability, to increase profit margins. That's the big difference maker between Tesla and its competitors right now. So here's where Elon Musk finally reveals what's going on with the change in price. So the most common question we've been getting from investors is about demand. Thus far, so I want to put that concern to rest. Thus far in January, we've seen the strongest orders year to date than ever in our history. We currently are seeing orders at almost twice the rate of production. So, that's to say, it's not to say whether that'll continue. And actually, we've raised the price of Model Y a little bit in response to that. So it seems like the price cut was so strong in terms of the response from customers that Tesla actually brought the price of Model Ys back up a little bit. That big price reduction caused such a boom in customer demand and customer orders that it's creating a backlog. And so now Tesla said, hey, wait a minute, we can actually increase the price a little bit because the response was so strong, maybe stronger than Tesla thought it would be. And so now it's saying, okay, you know what, we can increase price a little bit because that price cut was going to hurt our profit margins, our gross profit margins. So maybe now that customer demand rebounded so strongly, we can work to reinforce our gross profit margin with a little bit of a price increase, it looks like. Moving on, the company revealed we're also making good progress on cost control. We're seeing cost production in Berlin and Austin drop commensurate with the growth in production. And that's what I kind of highlighted earlier. Tesla's one of the few EV car makers that's demonstrating that the cost growth of costs are diminishing with the growth in production. That's really good news if you're an investor. That's something I look for in an investment, is this economy and scale. If the company is growing rapidly, I want to see that growth positively impacting profit margins and profits overall. And they're also at about 100 million FSD, full self-driving miles outside of highways. This is a big thing for Tesla, and one of the bullish arguments surrounding the price cuts was that so many people are gonna, more and more people are gonna have Tesla cars, and then when this FSD upgrade becomes available, Tesla can just sell that over-the-air software upgrade to all of these customers at thousands of dollars, and these are very high profit margin, close to 100% gross profit margin, management has said, in these software sales. So that's one of the bullish arguments that of these price cuts, is that it's going to get the products into so many people's hands, and then they're going to upgrade to FSD, and those upgrades are going to be huge profit positive for the company. And then speaking to battery production, they reached enough production to reach 1,000 cars a week at the end of last year, and they're going to increase capacity by another 100 gigawatt hours, as announced by the Gigafactory from Nevada the day before this announcement. But to be clear, we will still continue to use other cell providers, meaning they still don't have enough production to be self-sustaining in terms of battery output. It's just that the demand for lithium-ion batteries is almost infinite, and it will be for quite some time. So we feel we can scale a lot faster using both suppliers and internally produced cells. So this is all important, and this is perhaps why it gave management confidence to lower prices, because they knew if they lower prices that customer demand is going to go up. It's just a matter of how much is customer demand going to go up. And the fact that they've got their supply chain secured and costs under control meant that they were able to do this so that when customer demand does increase, they can fulfill those orders at reasonable profit margins. Of course, it might not be as high a profit margins as they were used to, over 25% gross profit margin on the vehicle side. But still, even if the profit margin falls a little bit and they make up for it in more unit sales, then that could mean that it was a beneficial change, right? To lower price, to increase overall profits, even though it decreases profit margin, right? Managements are usually more concerned with overall profits instead of just profit margins, okay? So there you have it. Elon Musk finally reveals what's going on with Tesla's car sales in response to the price cuts. That's all I've got for this video. Stay tuned for another video next time on progress of Tesla's car sales. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.